Rhett, I'll start with you. What are the prospects for both Pinterest and Zoom as you see them?
Well, I think let's start with Zoom, because Zoom, as you say, is something that we don't see very often, which is a company that actually has EPS, like earnings per share. So that's obviously very good, but it's also got fabulous growth, and it's already at scale. Often when you see companies with this kind of growth rate, they're still really small. So everything that we see when we look at Zoom and everything we hear when we talk to people at Zoom is that it's going to be a rocket and will price above its range and trade way up tomorrow. As far as Pinterest is concerned, it's fine, it's great. I mean, our score on it was sort of a little bit above average. When you compare it to Snap and look at its loss ratio, it's sort of on its way to break even on the EBITDA line. It's got user growth, which Snap doesn't have, and it's already got a scaled audience. So what we're hearing is also that deal is in fine shape and will price at or above the range.
That said, Jitendra, Pinterest is doing a sort of flat round here. I mean, it was aiming for a valuation that was below what it raised at in the private markets. Is that smart?
Yeah, I think given what we saw happening with Lyft, and also if you just look at history of key internet IPOs, the first 6 months, the first day craziness has been pretty consistent, and the volatility has been there. At least they are setting their expectations in line with what they can deliver on growth. So if you look at the growth prospects of this company, like you said, you know, if they are able to jump over these near-term hurdles that they have, they could triple their revenues in the next 4 years.
What are the near-term hurdles?
So there are three, basically. So one is how they scale their revenues right now. So self-serve platform, the automated buying platform that they need to scale revenues quickly is still nascent. They're still depending on Salesforce, sales team chasing few large advertisers. So it'll take about a year to sort of transition to that. Snap already has. Then you have Google de-indexing, you know, key landing pages for Pinterest. That affects user growth. It happened like 1Q of last year, but that might play a role over here. But the main thing over here for Pinterest is the average revenue per user is about $3 right now, compared to Twitter, it's $8. So there's a lot of room to take this purchase intent that the buyers have and sort of like push advertising in front of retail audiences.
Now, Rhett, Pinterest has interestingly been trying to distance themselves from social media. So what is Pinterest? Is it like social commerce discovery? I mean, what bucket would you put this in?
Well, I think that, you know, the way I would define it is, you know, social is requires somebody else on the other end of the network to interact with you. And you can interact with Pinterest without that. Pinterest is a way to interact with the world as opposed to interact with other people. And so I think that comparison is actually fair, that the content doesn't come from other users, it comes from the internet at large. Obviously, for all kinds of reasons, there are, you know, it's obvious why somebody would not want to be called a social network right now at this point in 2019, so that also makes sense.
And Jitendra, are risks around privacy, is that a concern for Pinterest? Misinformation? You know, an ad-based network, which has maybe a different incentive structure than one.
Well, because, as the point was made, that because the content is not user-generated per se, everybody's just making their wish list, things that they would love to buy down the line. And if you look at the searches on the platform, which is going to become a key metric for this company, most of them are unbranded, so they don't know which brand to buy. So basically, you kind of marry like this repository of things that I would love to buy to brands that would love to sell to them, and that creates a unique story where it's more about user engagement, less about user growth, and that revenue growth metric could be sustainable because of that perspective.
So, Rhett, let's talk a little bit more about Zoom. Who
Sure.
are the main competitors in the video conferencing market? I mean, you think about legacy players like Cisco, like Polycom. Who is Zoom potentially unseating here?
So that was one of the reasons that Zoom scored as highly as it did with us is, you know, from the perspective of new companies as opposed to, you know, the kind of old Cisco platforms like you mentioned, you know, they kind of own the space. Like Zoom meetings are a thing, so it's a little bit like Ubering. You know, I'll send a Zoom invite. Means that they've sort of taken it a little bit like Skype did. So one of the things that we like about their differentiation is they seem to have that category sort of to themselves. As far as a business is concerned, you know, we think it comps to DocuSign pretty clearly. You know, it's going to be a little bit more expensive than DocuSign, but I guess the growth and the profitability sort of make that make sense. But, you know, you should have the space sort of to yourself unless one of the big guys like Google decides to give this product away.
Both of these companies are looking at a $10, maybe $12 billion valuation. Do you think there's going to be competition between them on the day? I mean, are investors going to be attracted to one or another? Could there be some sort of split?
It seems like investors like to make money, and so there's room to buy both. Right, so I mean, again, everything that we're hearing is that these deals are both in great shape, that Zoom will trade very, very well, but investors basically like the Pinterest story. And I think, obviously this came up, but Pinterest is really priced right. I mean, when you look at what Pinterest is doing relative to what Snap did, Pinterest is raising, half as much money with twice as much revenue. So it's a very, very attractive valuation story, and the trading dynamics should be good.
It may appear to be priced right, Jitendra, and we saw Lyft, go above its pricing range as well on the initial trading day, huge first day pop, and now shares are below their IPO price, significantly below their IPO price. I mean, could we see that same thing happen with Pinterest, where there's this perception that the price is right, but then,
right.
A few days into it, investors change their mind, or there's a lot of short interest, or something else?
Absolutely. So, if you see the history of key internet IPOs over the decade, this happened to even profitable companies, Facebook, Alibaba. So first 6 months is more a function of things like you said, supply and demand of stock, what's the lockup periods look like and things like that. So yes, the volatility could happen. But if they are able to sort of jump through this, deliver good results in the interim, they can sustain the high valuation.
Now, Rhett, you were one of the analysts, the first analyst that came out fairly critical of the numbers that Lyft was pointing out, saying there wasn't enough to make a complete financial model. Now that you see what Uber has put out, do you think that Uber will suffer from the same problems as Lyft, or do you think it's a completely different story? Well,
so, I mean, what Lyft did was, to some people kind of offensive. Because I think when you're losing $1 billion on the EBITDA line on $2 billion of revenue, you kind of have an obligation to explain to investors how your profitability story is going to improve. Uber is losing $3 billion on $11 billion of revenue and is obviously a much bigger company. I think their disclosure was better than what Lyft put forward. Obviously, the detailed metrics are much more significant than what we heard from Lyft. They broke out bikes and scooters, for example, among other things. But still, I think price is going to be a very important factor in how the Uber deal is perceived.